Hey, everybody. It's Wednesday and it's cloudy. Happy Wednesday and welcome back to the Real Deal Pod with Allister and Geoff. This is lucky episode number 13. I'm glad all of you guys have been listening. Our listenership, viewership, or whatever you want to call it, is growing. So thank you all for continuing to listen to the and take the advice that we give you. We truly appreciate it. Geoff, my man, how are you, my friend?
You know what? I'm doing well. Wednesday is always that hump day. So, you're just climbing up that mountain. You're almost at that top, and then it's all downhill for the remainder.
Right. I sometimes feel like my Wednesday is a lot of people unloading on me so they could have their Thursday, Friday, Saturday, Sunday free, and my days just keeps getting busier. It's ridiculous how busy I've gotten today. It's crazy, my man. Crazy.
Yeah.
So how's your weekend, man?
You know what? The weekend was good. I did an event with the Valley Fondo, or I did the Valley Fondo, which is an event, 120 kilometers.
Wow.
Got that done in just under 4 hours, 3 hours, 50 minutes. And my bum is just starting to feel normal now. So
that is wild, man. That's a lot of riding, man. Wow. Good for you. Good for you.
It was a lot of riding, and it's my second Fondo that I've ever did. I did the Okanagan Fondo last year, and I did that one in 4 hours and 22 minutes, but my body was just suffering.
Right.
In the Okanagan Fondo. And my goal for the Valley Fondo was just not to cramp up, not to seize up. And you know what? It was mission accomplished. Didn't seize up and felt good the whole ride. And ready to do another one.
Good for you, man. You put me to shame. My weekend was way more chill and way less athletic. I actually took the time and took my wife on a date. We went out for a lunch date on Saturday. I've been so busy, so made the time to take Michelle out on a date. We went out to Haven. Nice little place out here in Clayton. It's on 64. Oh, it was wonderful. We had the Saunders fried chicken sandwich. And then we had the NA tourist. No drinking. We were driving and we were just going to go out and run some errands. But we had the NA tourist. What a wonderful drink that was. So wonderful atmosphere. A lot of cool stuff that was going on in there. We got to see I guess they were doing a food shoot. So it was really neat to see that process done and the lighting and the guys taking the photos. It was just a really cool atmosphere. The staff were amazing. Yeah, just tremendous. So wonderful little place. If you're ever out this way, stop in, check out Harvest. It's right beside Royal LePage Wollstonecraft, which is actually where I got my start as a realtor. So I always thank and love them for taking a chance on me when I was interviewing brokerages and having me join them. I'm now with Royal LePage Little Oak though, and loving them just as much, a little bit more, but both of them are amazing. So I always like to just go over and see some of my old friends over at Wollstonecraft. There was a couple of them actually in the restaurant. And so just go check out Haven if you're around. Amazing place.
Yeah, it looks like it's got some yummy food and yummy drinks. So that's my two favorite things.
Yeah, right. That fried chicken sandwich was amazing. So good. Yeah. Yeah, man. So what are we going to talk to today? We've got so much going on with interest rates. That's really one of the reasons why my day has been so busy with the quarter cut, just like we were anticipating was going to happen. Real estate just started getting busy again. It has happened. So it's just interesting again to see how, everything kind of follows in tow. It's interesting though, with the amount of listings that we're seeing coming to market. it's driven us into a buyer's market now, right? So buyers finally now have quite a bit of leverage depending on pockets. So I always want people to remember there are pockets that are busier than others. There are pockets that sellers have more of an advantage than a buyer does, and that's why it's so important to have these discussions. But with all of these listings coming to market, it really is starting to feel like we're going to have a spring market in fall.
Yeah.
Yeah, it's just wild out there right now. So yeah, so I know it's been busy on my end. I can imagine what it's been like on your end. So I know we wanted to talk about rates today. So I figured I'd give you the floor, kind of just lead off what we wanted to discuss today.
Yeah, well, it seems like if you're at your workplace, there's that water cooler, and everybody around that water cooler seems to be talking about the recent Bank of Canada rate cuts. And really the discussion about fixed rates, variable rates, and what are we going to do moving forward? You know, to your point, Allister, it seems that this rate cut has excited a lot of people about jumping into the real estate market that were once on the fence. And as we know, you know, as one person gets excited, the other person gets excited, and their friends get excited, and that other person gets excited. And before you know it, we're kind of going into, as you said, a seller's market, right? Where there's people that now want to buy, which now becomes a seller's market. And it seems like this recent rate cut that we had in June has just triggered that. So I wanted to talk about fixed rates. I want to talk about variable rates, and just kind of, you know, scratch the surface on what that is, how that looks like, and just kind of, again, throw some golden nuggets along the way.
Yeah, sounds awesome. Let's go for it, man. Let's do it.
Well, here's the thing. I had a conversation with a client of mine, very highly intelligent guy. And he says to me, he's like, "Hey, Geoff, you know, I'm thinking about doing a variable rate. My mortgage is coming up for renewal. I'm thinking variable. I'm not sure about fixed. You know, what are your thoughts, especially now since prime rate is at 4.75%?" And I'm like, no, 4.75%. That's our overnight lending rate. You know, our overnight lending rate went from 5%, dropped down a quarter of a point to 4.75%, which has a direct impact on your prime rate, which is what your variable is attached to. And what I had to explain to him is that the overnight lending rate is not the prime rate. So your prime rate is not 4.75%. Your prime rate actually was 7.2%. Now it's 6.95%, less the discount that your lender is going to give you, or less the discount that you're already in. So I wanted to kind of make it really clear that when you are hearing about an overnight lending rate, or the Bank of Canada has cut a rate down to 4.75%, which they have, that is the overnight lending rate. That is not the prime rate. The prime rate also dropped a quarter of a point, which was 7.2%, which is now 6.95%. So, you know, that was a conversation I had this week, which I felt was really important, is because, again, if this one person didn't quite fully understand, I'm sure there was hundreds of others that could be as equally confused.
Yeah, for sure. And that's one of the things, is that it's so utterly important to understanding your mortgage rates, and being able to understand how the difference between numbers, and how those affect you. Sorry.
Right. And again, just even going back to that quarter of a point cut, what that means for you, if you are in a variable rate and you do have a mortgage, that means it's a rough savings of about $15 on every $100,000 that you have. So our next Bank of Canada meeting is coming in July. There's Sherry Cooper, economist for Dominion Lending Centers Group, predicts that we're going to see a full percentage come off of our prime rate by the end of this calendar year. So that is her expectation and her forecast. There are others out there that believe that we're going to see a drop of 2% in our prime rate within the next 12 to 24 months. But again, I always encourage people to, it's not what you're hearing from these economists. These are very smart people. I often jokingly say the only thing economists agree on is nothing. I've said that before, but it's also important to understand that our variable rate or our prime rate is all attached to Canada's inflation rate. And I kind of made a little bit boo-boo on our last pod and said, hey, our Canada's inflation rate now is at 3.7%, which is the lowest it's been in 3 years. I meant 2.7%.
2.7.
So Canada's inflation rate is at 2.7%, which is the lowest it has been within the last 3 years. And understand that Canada's ideal inflation rate is 2%. So if we can continue on the same course that we have been on, we are expected to see another rate drop come July. And I believe if that happens, Allister, I think that's going to get even more people excited. And I believe that's going to make more people jump into the market. And we've discussed this. I think the fall is going to be the new spring.
Yeah, and I'll just touch on that a little bit quickly, right? We're currently down about 50. The Canadian real estate market is down on average about 15%, right? Since its highs in 2022, since all the craziness happened. Now, CMHC, I think it was last week, let out a report, and they're forecasting that the market will return to that 2022 peak sometime in 2025.
Wow.
Yeah, a year away.
Wow.
And in 2026, they believe will surpass 2022. So as crazy and as expensive as everybody thought it got in 2022, and how nobody's believed that the craziness will happen again, CMHC is reporting that in 2025, we're going to match 2022. That's a year away. And in 2026, we will surpass it. That is 2 years from now. We will be more expensive than 2022.
Yeah. So in plain English, by 2026, your property is going to be higher than what it was worth at the peak
of 2022. Yeah. Or if you were buying and you were sitting on the fence and you were waiting because you thought 2022 was expensive. If you're going to wait to 2026, you're going to be paying more, right? And that's the part that we've always said, waiting and trying to time a market doesn't make sense.
And we've talked about this before, Allister, is your biggest appreciating asset is going to be the homes that you own. And the biggest, your net worth is going to come from those homes that you sell, not from your employment to income, right? So we went through a season there where, market's going to correct, the market's going to crash. And what CMHC is now saying, and this is pretty much just history telling you what it's always done, is that your house appreciates each and every year. Yes, it may dip, it may correct, but at the end of the day, the house you buy today is going to be worth more than what you bought it for down the road.
100%. 100%.
Yeah. I know one of my favorite sayings is your house is your biggest piggy bank of your life.
Right. That's exactly it. So let's get back to then understanding the rates and stuff like that. So with all these rates, the economists now predicting that rates may drop or even further. Some are saying it's going to drop 1 point. Some people are saying it's going to drop 2, right? How now does somebody choose between a fixed and a variable? How now does somebody choose something that makes sense?
Well, let's fix rates, just so we understand, is all dictated by bond yields that are happening outside of our Canadian borders, right? So a lot of people believe that fixed rates are going to drop at the Bank of Canada's meetings, or they're going to increase because of the Bank of Canada meetings, which is not necessarily the case. Our fixed rates move up and they move down based on the bond yields that are happening outside of our Canadian borders. typically based on what the US bond yield is doing, right? Our variable rates are dictated by what's going on inside our Canadian borders.
Right.
And basically, our inflation rate has a direct impact if that rate is going to be going up or down with the prime rate, right? So now that we're seeing for the first time in well over 2 years that our variable or that our prime rate has actually dipped, we are now starting to see a lot of people talk about variable rates again, as far as should I do a variable rate?
Yeah.
The reality of it, though, is fixed rates are still much lower than what the variable rate is. So when it comes down to should I choose a fix or do I choose a variable, it reminds me of a conversation that we had with clients, 5 years ago when we were in that season of ultra low rates on the fixed side. There was fixed rates, I believe, in that 2%. We had variable rates actually in that mid 1%. They were very, very close. And in that season, we had many conversations, and it was called the 50 basis point rule, right?
Right.
So the 50 basis point rule was you take your best fixed rate, and let's just say for giggles, it's at 4.74%. You then take your best variable rate, and let's say for giggles is at 5.95%. And you do simple subtraction. And when you do the simple subtraction from 4.74 to 5.95, the difference is 1.21.
Right.
Now, if the difference is lower than 50 basis points, there is a very strong argument and a discussion to choose a fixed rate.
Okay.
Now, if that difference is at 1.21, there's a very good discussion to actually, if it's above the 1.21, it's a very good discussion to have a fixed rate. If it's below the 50 basis points, there's a very good discussion to have a variable, right? So in this case here is that if your best fixed rate is at 4.74 and your best variable rate is at 5.95, and the difference is 1.21, it's above 50, a very, very good conversation to go with a fixed rate.
Right. Now,
again, if our prime rate drops, say 2%, that 5.95, again, for giggles, comes down to 3.95. Now you take your best fixed rate, and let's just say it's at 4.74. You take your best variable rate, now say if, we rub our crystal ball and it's now 3.95. The difference is 0.79. So again, still a very good conversation that a fixed rate might outperform.
Right.
But this is where, again, if it comes below 50, there's a very strong argument to be in a variable.
In variable rate instead.
Yeah. So yeah, the 50 basis point rule, it's really just simple subtraction. And when you do the simple subtraction on the best fixed and on the best variable, if it comes below 50, a very good argument for a variable. And if it's above 50, a very good argument for a fixed.
Okay. So then the other thing I guess somebody would want to maybe look at is then with all of the changes in interest rates and things that are happening right now, depending again on affordability, maybe their term.
Right.
Yeah.
And we're seeing a lot of people, we've seen a lot of people do 2 and 3 year terms. I'm going to just say even up to 6 weeks ago. And with this recent activity with bond yields, with this recent activity with the Bank of Canada lowering its prime rate, which actually had an impact on the US bond yields, which actually dipped them down. So we saw fixed rates come down. Now there's a lot of conversation around 3 and 5 year terms and conversation about variable rates once again.
Yeah. And the only reason I asked that was just because, we talk about variable rates being impacted based upon what goes on within our borders, right? Right. So I just, we heard yesterday that the capital gains was brought to the floor, right? Yesterday, they moved the capital gains forward, the Liberal government, yeah, and they moved it.
As Jay predicted.
Yeah, they moved it forward, right? Which is, so we know that could impact our variable rate because that's something that impacts us. And then the conservative government today announced, or today or yesterday or today announced that their platform is actually to reduce taxes. So that's why I always wonder, like, so let's say, you know, a conservative government gets into power and they do in fact reduce taxes, then is there a chance then that the variable rate could drop lower quicker, right, than the fixed rate? Is that a possibility?
You know, I wish that was.
I know that's a crystal ball. I know, I just don't know if that makes sense. Like, because how you say things within our borders impact the variable rate, right? So I'm just wonder what things that within our borders would cause that variable rate to drop lower than the fixed rate.
Well, at the end of the day, with variable rates is if the Canadian economy is doing well,
yeah,
we're going to see our variable rate come down.
Right.
And when our Canadian economy is doing well, what happens is that investors then pull their money out of the bond market, which has a direct impact on yields.
Right.
And then they start putting it into the world market, stocks, bonds, and mutual funds. And when that happens, you start to see the fixed rates rise. And now you start to see the variable rates drop. Okay. Right. So again, when will we see variable rates outperform fixed rates? I believe as our economy becomes stronger, and the world market and investors have confidence back into Canada, that's when we're going to start to see variable rates outperform fixed rates. And it's because investors or world investors are taking their money out of the bond market and now sticking it into the world market. And again, your fixed rates are all impacted on bond yields.
Makes sense. That's what I was, yeah, makes sense. Sorry, no, I just got an email come through and I just read it, read the subject line at the same time I was speaking. I said, yeah, oh yeah, makes sense.
Well, and here's where we're going with this too, like with variable rate mortgage holders, with this recent drop, you know, as we noted, that's about $15 off of every 100,000.
Yeah.
We're starting to see fixed rates come down a little bit now. Fixed rates, it seems like bi-weekly they're going up and they're going down because it's all depending on what the US bond yield is doing. But at the end of the day, people are starting to feel better about rates. Yeah. You know, the news that you hear about rates are not all fearful and gloomy like they were.
I know.
Yeah, 3 months ago.
And the sky is falling. Anymore.
Exactly. So I had another presentation this morning. I said, you know, the vibe is really good for people out there. And I gave the analogy. It's like, you know, when you go to a house party and the vibe is bad, you just have a bad time, right? And if you go to a party and the vibe is good, you're just having a good time. And right now, when people are talking about rates, the vibe is good. And psychologically, and we've talked about this is when people are now feeling a little bit better about moving into the market. They're feeling more confident as far as what the rates are doing, which is crazy to me because really it's not a huge difference than what they were doing. But again, it shows the mentality of people when they hear good news, they feel better about what's going on. Right?
100%. Yeah, it's always how that's framed. It's always how the news is framed, right? Which will drive our confidence, right? And we have every right to be confident in how things are going right now, right? Yeah. So, another rate cut would be nice for people. I think that, you know, I don't think that's out of the realm a possibility for the next one. I was actually one of those people that thought they wouldn't do it on the next one. I'm now stepping a little bit back from that stance and saying I could see it.
Well, and again, you know, when we talk about fixed and variable rates with clients and they say, well, what should I do, fixed or variable? You know, there are pros and cons to each. Like, remember, fixed rates, once you choose the term, your payment stays constant for that term, right? Variable rates, again, if you choose that term, and historically a variable rate has always outperformed a fixed rate outside of these last 2 years when our prime rate went up 11 times in I think it was like a year and a half period.
Yeah.
This is the first time in Canadian history that that our prime rate did that, and one of the very few times that the fixed rate has outperformed the variable rate. So, you know, when people are saying, well, should I do fixed or should I do variable? It really comes down to where you are at as far as how you like to manage your debt, right?
Affordability.
And if you're willing to play that rate game.
Sure.
I find people that don't like a lot of fluctuation and they get a lot of anxiety and they get triggered by what they're hearing and what's going on. You know, a fixed rate is a perfect rate for them to be in because it's constant, it doesn't change, and you know what it is going to be each and every month. Yep. And as of today, you know, it seems like that 3-year is the rate, the 3-year fixed rate is what people are going for.
Yeah.
This is now a time that a lot of people are now thinking about 5-year fixed terms because, again, they have dipped, right, to what I believe is going to be in line to what it's going to reflect like moving forward. It may go up, it may go down a little bit, but it's not going to, in my opinion, it's not going to be substantially different than what we're seeing today.
Right.
And then with our variable rate, you know, this is where I'm not going to say a crystal ball, but this is where there's a little bit of unpredictability. Sure, if our variable rate dips down up to 2% in the next 2 years, it's a great rate to be in. But I can tell you one thing, and I don't believe that this is going to happen again. If it raises 11 times in a year and a half, it's not going to be the best rate for somebody that has anxiety and somebody that really gets triggered by what's going on. Myself, Allister, I love the variable rate. For me, I understand the variable rate. For me, I don't get triggered if the prime rate goes up or goes down. For me, I take a look at the statistic of a variable rate as far as how it has always outperformed a fixed rate. And I'm a real big history guy. So once I really make a lot of my decisions based on what it has done in the past, because what it has done in the past is what it will do moving forward.
Normally dictates the future. And I'm the same way. I prefer a variable rate. Only time I've been upset is over these past 2 years. So for me, the only, you know, being 47 years old now and, you know, owning my first property at 23. Well, a long time ago. Yeah, I've never been disappointed up until the last 2 years. So that's fine. I believe in variable rates. Yeah, and I believe others should as well.
Yeah, and again, I think because of the recent rate cut by the Bank of Canada, and the encouraging things that the media are relaying out there, and when we talk about fixed rates, this is, again, people are feeling a lot more confident about moving forward.
And
right?
Yeah, that is so true. And like I was just gonna say, you know, for one person like you and myself, we prefer variable mortgages. I have one of my best friends who's accountant. He prefers a fixed rate because he just likes to know, just bang, bang, bang. That's what my bill is. It's based upon his affordability. He's like, I can afford it. I'm good. It's fine. I'm good. It just, that's what it is. So it's all going to be based upon you, your personality, right? What you're okay with. And that's the most important thing when shopping for your mortgages, what you're okay with.
Yeah.
Right. And making sure you get, of course, get the best advice you can possibly have to make that decision that you're okay with. But that's the most important thing in this.
Yeah, and when it comes down to choosing a fixed or a variable, like we talked last week, there's 4 different boxes that you could fall into. So it's not so simple by looking at a rate site, or it's not so simple by just trying to figure it out yourself, because again, there needs to be questions that need to be asked, that need to be answered, which determines which box of rates that you fall into, right? So this is where I always say is like, you know what, don't be asking your buddies when you're sitting in getting changed for hockey. Don't be asking your girlfriends where you're sitting around having tea or the beverage of the week, because their box might be different than your sandbox, right? And at the end of the day, talk to a mortgage professional, talk to somebody that understands what this all means. They are going to be the ones that are going to give you the best direction and at least a little bit of education so you can make an informed decision on what's best for you.
Amen. Thank you for that. That was fantastic, my man. That was fantastic.
And that's all I got. That's all I got this week.
And you got anything? You're going to drop the mic there and peace out on that, because that was fantastic, my friend. That was some very wise words. No, in all seriousness, those are very wise words. And that's in anything you do. Make sure you're talking to people that are going to give you the best advice that you possibly get to make decisions that are right for you. Don't listen to what your friends are doing, right? Because what worked for your friends worked for your friends. They're individuals. It's not 100% that it's going to work for you. What worked for your family might have worked for your family. It doesn't mean it's going to work for you. You have to look at this internally. You have to say, how does this need to work for me? Not anybody else, but for me.
Yeah. And sometimes the best advice is the advice you don't want to hear.
100%.
Right.
100%. Yeah.
And I had a business partner, and that was his major problem, is that he would look for the advice that he wanted to hear. So he would ask 20 people, 19 people would tell him the real deal.
Yeah.
It needed to be that one person that confirmed with his ideology for him to say, you know what?
That's a smart guy. He knows what he's talking about. I'm going ahead with this. Yeah.
Right. Yeah. So like anything, ask 3 people. If all of them are telling you the same thing, then usually that's pretty good direction. Exactly. Depending on who those 3 people are.
Yeah, that's exactly it. Don't go searching for the ones that will tell you yes, right? Search for the ones that are just going to give you the honest feedback, right?
Exactly.
Yeah, man. Well, that's it for me as well. So I want to wish all of you guys a great week. Again, thank you for listening. Continue to follow us on Spotify, Apple Podcasts, and wherever else you get those podcast apps. You can also find us on YouTube. And we're everywhere. Soon we're going to popping up on ebooks and all that crazy stuff, man. I ain't doing no writing, man. We can have a ghostwriter. If we're going to have to write a book, we can have a ghostwriter. I don't have time to sit around writing.
Yeah. Well, hey, maybe we use AI for that. Have that book written in 6 minutes.
I hear that thing does amazing things. I hear that thing can do amazing things. Awesome, my brother. Well, again, yes, thank you all for listening. Have a safe and wonderful weekend. It is supposed to be sunny out here this weekend, so make sure you take some time out to enjoy the sun. Enjoy it with your family, whomever you love spending your time with. Again, follow us on all the apps, Apple, Spotify, wherever you get your apps, and on YouTube. Geoff, thank you again, my friend. We'll holla at you guys soon.
Y'all have a nice day.